Good morning, everybody. Welcome to the Lock in Your Success Options Trading for Income Weekly Update. And I don't even know what date it is, but it's sometime in the middle of January. So before we get going, we would just like to remind you that this presentation is for educational purposes only. We are not broker-dealers or financial advisors, and we're not making any specific trading recommendations. Also, please be aware that the risk in trading options can be substantial, so please be aware of all your risks prior to placing any trades. And the trades that are presented here are hypothetical computer-simulated trades that are believed to be as accurately represented as possible. However, live results may vary. And thank you for letting me know that it's actually January 12th. That's awesome. So if you're watching this on some other some other venue, please check out our programs. Come on over to our website, lockinyoursuccess.com. We got the M3, the Bearish Butterfly, the ROCK, the M21. We have lots of great coaching programs, and we have lots of new stuff coming out. So if we just take a look at the markets here, what we had last week, we had a fairly decent down move into a support level, and we had a big bounce off of that. Nothing new here. We're just kind of, at least we're in this wide range of sideways chop. At least it seems to be narrowing down a little bit. This was a pretty, we had a faked breakout on both sides, which tend to be a kind of a pain in the neck when we're trading. But here we are. From here, I mean, this is just, we're just going to continue to be in this unpredictable sideways movement. We get these, rash movements back and forth. There's really nothing from a technical level here. Anything underneath the previous highs and certainly over the previous lows down here is really not going to tell us anything. That's about a 100-point range, which is very, very wide. And with our trading, we're just going to make these minor modifications if you're live trading to deal with the extra choppy market. And what that tends to mean is being a little bit slow in reacting to things, and sometimes letting things overextend a little bit. I mean, never taking on too much risk, obviously, but being a little bit slow with your adjustments tends to be beneficial in this type of environment. Whereas if you're in a very hard trending environment, it's a little more beneficial to be fast. But in this type of environment, that's what we get. So nothing really new here, and I don't really have a whole lot to add. Like I said, we're just chopping back and forth, and there's not much of a move here that actually means anything to us from a technical standpoint, unless we start breaking those levels. So I'm just going to kind of hop right on over into the positions here, because we got a lot of interesting stuff to talk about. This is our January V condor, so I'll start here. I did do an adjustment to this, and if you remember, this is pre-adjustment. I was saying if we fell into the V here, especially this close to expiration, we'd want to do something about that, and I did. I basically widened out our straddle. So we sold off these 1170s, and I bought, let's see, I'll just move forward. That way I'll have the, actually I bought the 1170 and 1120. So I moved them out quite a bit. And what I did to this is I widened the straddle out, here's our V condor, to the 1220 and to the 1120, and overnight looks like this. So let me just back this out. We have a position that looks like this. We're just going to kind of let this expire. No issues here whatsoever, so we will let that go. And that's all we have for the V condor. Let's shoot over to, we'll shoot over to back trader here and go back to Monday. We have several adjustments going on with this. Here's our window. We have several adjustments going on with the M3 trade. So if we go back to Monday and we go to our January M3 trade, it was looking like this. Let's drag this up so you can see it. Actually, I can do that. So we were sitting here with the 1170 shorts. We had some verticals in here. We had some 1170, 1190s, 1170, 1200s. Our position looked like this. End of day, was it Monday? Yeah, end of day Monday. What we did is we ended up rolling this back to 1150. So essentially we just took the 1170 position, we rolled it back to 1150 via a condor down here, right? And then we did a series of other condors essentially to bring us to this position here where we're short our 1150s, and then we're short 10, 1150, I'm sorry, 5, 1150, 1170 verticals and 5, 1150, 1180 verticals. Puts us at positive 13 delta and gives us a position that looks like this after the adjustment. Now on Tuesday, the market continued down. I wasn't really close enough to my short strikes by the end of the day to warrant a rollback. So rather than rolling this thing back, I just bought back 5 of these 1180, 1170 verticals, put us underneath our positive delta limit, and gave us a position that looked like this. So it did hurt our gamma trend up here a little bit, but it was still acceptable. And rolling this back corrected my delta. So that's what we looked like on Tuesday. And then on Thursday, with the large up move that we've had, what I ended up doing is 5 1170, 1180 verticals because we were down at 1170, and we did 5 1170, 1190 verticals. Brought us to under minus 50 delta outside the tent and into this position here, which is actually a very nice position for coming into expiration. I like to be right on the edge of this tent line. Yeah, obviously, if the market were to continue to take off, then we pretty much would take what we got. If the market backs in at a reasonable level, we can make some gains here. So coming into Friday, the market did back off a little bit, and we're running at about minus 67 delta. We're currently inside the tent, and we're up a few percent. So a tough trade this month. And this trade here, I went over, I reviewed this last month. I had some people who reported some losses, not losses, but drawdowns in this at this time, and I was kind of assuming that was generally the case. I mean, I trade this a little bit differently live, but I went back and analyzed a whole bunch of positions, and pretty much anybody that I've seen who's drawn down, and it's not very much. It's only like maybe a percent or something. But pretty much everybody I've seen who's been drawn down at this point has deviated from the guidelines in one manner or another. So, going back and retrading this, and then talking to a lot of other people who traded directly by guidelines live, they did fine on this. I've had reports from about a 2% gain. I mean, some people had a 10% gain, but if you were up 10% on this, then you did not trade by guidelines either. So, but realistically, I had people who traded by guidelines up between 2 and 5. So, looks like a good trade for the month. This should be fairly representative of what most people have, unless you've did something a little bit off base here. All right, so I have a question. What range do the Greeks use for the M3 when in expiration week? I use all the same Greeks ranges in expiration week. I don't change anything. So from today onward, do I do multiple adjustments intraday, or do I wait till the end of the day to make adjustments? I will, coming in here, will look something like this. Generally, I'm going to try to make adjustments at the end of the day. However, because I know I'm getting such a fast collapse in the T+0 line up here, I will be a little bit more tendent to the upside to make an intraday adjustment and rise this higher. So, so what I'll do is I'll have intraday adjustment parameters, I'll have end-of-day adjustment parameters. So I'll take something like my normal end-of-day adjustment parameter here is plus 50. I'm not going to adjust it plus 50 intraday, but if I get to probably 150-ish, which is down into here, which is 3 times my normal maximum, then at that point I would be pulling something on the trigger intraday down here. Other than that, especially in the choppy market, I kind of want to let the market move around a little bit. Same thing on my upside. I get outside my tent. I have a positive 50 delta limit essentially, which it's going to be this is going to change when the market opens, but I know that this T+0 line is going to tend to collapse on me this close to expiration, so I will do things intraday to prop that up if we get particularly positive Vega, which is going to be up in this range of, well, here it's showing me up at 1205, but the reality is that's probably going to occur a little over 1200 with today's lines. And so I would consider doing that intraday, but other than that, I tend to leave it alone. Yeah, so Greeks become less and less important at expiration week. So once this thing backs into like this range here, I'm more concerned about how far am I from my short strike. So I'm going to try to stay 20 points from my short strike at close. So if I pull under so we're at 1150, if I start pulling under 1170, I'm going to start dealing with this to the downside. And to the upside, usually, I mean, it depends on how I'm positioned the way I am, I would leave these here. You know, I have a different criteria. So now to the upside, I'm looking more for a Delta Vega type of criteria on the upside. And yeah, Delta and Vega is most important up in here. All right, I want to keep my Vega negative. I want to keep my Delta positive. I want to give myself some room to the downside. The reality is trading this way, i.e. the safe method, you're not going to make any more money out here probably. At this point, the market's going to have to come back here. Basically, if the market takes off, my strategy is loss control. And to the downside, my strategy is try to make more money. All right, so Vega. So I just have a Greeks question. You know, what's essentially Vega? Vega is going to be the amount, the theoretical amount, right? We're going to say theoretical, the theoretical amount that your position is going to change value with a point of Vega change in the market. So theoretically, if nothing else changed and volatility went up, theoretically this loses $265, at least for the first point. And if volatility comes down, then it gains $265. More important to me is what that Vega number represents. To me, that Vega number represents the stability of my T+0 line. If I'm positive Vega here, that means the stability of my T+0 line is dependent on this long option. So that being the case, I don't want that necessarily, especially close to expiration. So I'll make it more negative Vega. In other words, I'll make the value of this line more dependent on some short options that I have, and that's how and that's basically. I mean, this is as basic as I could put how we use it and what it is. So hopefully that helps. How many days in trade? How many total adjustments? I mean, you'd have to go through the T-log here. You can take a look at the T-log and look for yourself. I mean, we've moved this around a little bit. We've had some pretty big market moves. So here is the T-log of this position. I'll just kind of scoot it up a little bit at a time. It's 1226. It's 1215. And there's our entry date, 1121. So this was a 56-day trade we're doing as a sample. So that's how long we've been in it. All right. Do I have for an M3? Do you have guidelines about how far apart the short strikes are, if adding verticals in one direction or another? This month I kept adding verticals to the upside without rolling my short strike on the downside and was not sure if this was hindering me. Should I be rolling up the short strike on the bottom at some point? As per above, for the M3, not sure if I was hindered when the market came down and volatility crushed my profit loss. Yeah, we had volatility issues with the end of the year, and really they haven't let up on us at all. So you know, as far as guidelines go, how far I'll roll, I mean, I will roll. In other words, I won't roll up these. So if I'm, and again, you know, when we get into advanced M3, we'll do stuff like this per se. But as far as a novice level M3 trader, I'm going to keep 50 points between these two. In other words, I'm going to have 10 1100s, and I'll have 50 points, and I'll have 10 1150s. I won't go any wider than that. ever, and I'll roll up to the point where I'm tucked in all the way up under my 1190. Realistically, if I get past that point, I can start shutting this side down. That's not really outside the guidelines. I could do that, but that does make the position very volatility sensitive. Certainly if I start rolling the 1150s, it makes it more volatility sensitive. You have to decide as a trader at this point, if you're up in the 1210, 1220 level, and you're completely here, 1200, 1190, right? When we start talking about more advanced M3 traders, they understand that they're at a pretty high volatility risk there, and there are ways to correct that, right? I mean, we can talk about this all day, but there's ways to correct that volatility risk. But yes, if you're going to go into a condor-ish type of a position, butterflies aren't terribly sensitive to volatility. Condors are very sensitive to volatility. So, as you push this out into a more condorish type of position, you're going to increase your sensitivity to volatility. So hopefully that helps. If I'm still in my M3 on expiration day and looking good, what will happen if you just let your options expire? Would that be a bad decision? Not necessarily. If I'm positioned okay, I am okay to expire this. You just have to realize that, if this was Thursday night and I'm sitting here, I wouldn't expire this, because not at least this way, because I have too much risk here for this dropping. So essentially, what happens if I expire this to the options themselves? Well, nothing happens to your account other than, say the market expired right here, nothing happens to your account except that they will, if you're in certain, depends on your broker. If you have certain brokers, they will charge you for in-the-money options exercising. So they charge me to exercise these 1200s. They charge me to exercise these 1040s. It's $25, or it might be 35 for Thinkorswim. I don't remember off the top of my head. I have to look. But they would charge you, and they charge you per strike, so not per option. So I could have 1,000 strikes at 1200, and they'd only charge me $35. Which is cheaper than trading out of them. But if I only have one and they charge me $35, well, that's kind of expensive. But that's typically what they'll do as far as charging you anything. If you have interactive brokers, they don't charge you anything. So it depends on your broker there. Now, as far as where the settlement value is, that's a different story, right? The settlement value, if this is Thursday night, it's going to be dependent on what they call the RLS, which is the opening value of all the stocks in the Russell 2000 on Friday morning, and sometimes that can be significantly different from where we are now. So you have to keep that in mind. But from a standpoint of, does anything terrible happen? Assuming your settlement value is within the range you want it, no, nothing terrible happens. Not a big deal. Let's see. At this point, would I even let the market get outside the tent? Yeah, I have no problems. I'm just going to watch my Vega numbers. I'm going to watch everything else, and like I said, this is a break-even scenario. Well, not break-even for the trade necessarily, but I go into not losing any more money mode, and would probably end up going into some sort of a thing where we sell off this and we buy some of these back, minus 10, plus 10, or something like that. Right, you go to something like that, and then you're just in loss. I mean, you basically just expire the thing. And if the market happens to trend back later, then we can deal with it. But if the market takes off to the upside, that you'd be up here somewhere. You'd have some downside room, and you just let it expire, or you can close it out. I mean, one or the other. Usually, I'll let it expire, because you never know. Every once in a while, you'll get this 30, 40-point chop back and end up here and making some sort of a bonus. So I usually like to keep that opportunity open to myself. The closest day to expiration I'm willing to go outside the tent is pretty much more dependent on my Greeks. So if it's a very volatile market, I can go outside the tent the day of expiration. It's not necessarily a problem. If it's a very low volatile market, I might be 5 days to expiration, and I might be sucking wind out here in this range because the volatility crushes so bad. So in other words, I can't hold my Greeks. So it's more of a function of can I hold my Greeks numbers than it is how close to expiration I am. Of course, during the day of expiration, I'd want to, well, you'd probably be closing out anyway if you're outside the 10. All right, so that is the M3 position, and I have to move on because we're spending a lot of time. But thank you for the questions. Thank you very much. It's great. Helps me understand what people need for content coming up. So that's awesome. All right, so let's take a look at the ROCK trade here. This was positioned, well, let me get my calls out here. On Monday, let me make sure that was what time of day I'm doing stuff here. Here's the T-log, by the way, so you can just kind of take a look at that. On Monday, this was positioned like this, and there were no adjustments on Monday. So if you remember, this is what we had. We had a failed, this was started out as an M3. It got converted into a ROCK position, and then the ROCK position failed because the market kind of crashed on us, right? So this is a failed M3 ROCK conversion. And what tends to happen here is we just prepare for higher volatility and roll back into an M3 eventually. So this was a really nice month. We had, like I said, M3 to ROCK position to CAT position, and then back to M3R. So from here, this is managed pretty much as an M3 trade. Rules are a little bit too complex to get into this second, but with the time that we have. But what we're going to do here is hold this position until Thursday. This did not, if you go to Tuesday or Wednesday, this didn't have any issues with that pullback. We didn't have any delta issues or anything, so that looked good. And Thursday, when the market took off, what I ended up doing is selling off the upper butterflies because they were causing a Vega problem for me. So I ended up selling off the upper butterflies. I ended up adding verticals in here at 1150, 1180, 1150, 1190, and just essentially went back into an M3 position, which is the exact same M3 position I was in before. So this trade here, the ROCK trade, is essentially in the same position the M3 trade is, and essentially the same profit and loss numbers. I think it might be down a little bit more. But that was a good example. The whole trade, if you go back and review this, its progress, the whole trade was a really nice exercise in position management, because realistically, had the market stalled at the top of the trend like it has been doing, or maybe ground up a little bit more like it has been doing, this would have been a nice 20% gain, and we went for that. But the market failed, and we just go back into our regular position here again. So it turned out really, really nice. It's going to be a small gain, but we really like it. Would I convert back into a ROCK trade? I probably wouldn't at this point. It's expiration week. I would probably just let this thing go, flatten it out to the outside, and move on. I could convert this if I wanted to be really aggressive, but I'd be taking on more risk than I probably would want to. So I would just prefer just to stay in this position here. Let's see. January ROCK. Oh, January Bearish Butterfly. This is an interesting trade. I had initially assumed, because I got some reports of losses here. I didn't trade this way myself. I did a live trading. I did have a Bearish Butterfly on, but I did a Bearish Butterfly into an M3 conversion, which I often do if we get, and I think I talked about this when it was actually happening. We had the market, it pulled back deep into the butterfly. We're getting closer to expiration, and the market starts taking off. Then, in those cases, a lot of times I'll just convert a Bearish Butterfly into an M3. Let me just switch over to that. So that's the way I traded it, and I had some reported losses on this, so I just assumed that everybody lost. But then when I said that at a group mentoring session, I had 4 people who emailed me and said, "Oh no, I'm doing perfectly fine." So I'm going to give you guys a choice on whether you want to max loss this out or if you want to. I'll show you the evidence here, and you can say, hey, let's call this a maximum loss or let's trade this out. So from here, if I do my T-log, actually let me just go to my notes. Okay, so the end of the day Monday. Let's go to the end of the day Monday. We had a down move. This is how we looked. Let's go to previous to adjustment. But we got the down move. At the end of the day in bearish butterfly expiration, we want to cut our delta down to about plus 250. So to do that, I added in a set of butterflies here at 1180. I sold off 2 butterflies at the 1220 level, down about $5,100, plus 241 delta. That's perfectly fine. On Tuesday, which was the big down day, we'll go to 11 a.m. Actually, go to 10:30. I'll show you where we sat. Right at this point, between 10:30 by 11 o'clock, we were well over our maximum intraday delta numbers. So at 11 o'clock, what I did is we sold off the remainder of these 1220s, went to about minus 250 delta, which is normal, down about $7,800. Now from here, the next half hour, we had a capitulation down. Never touched never went over our maximum delta numbers. However, we did pull down to this about 14.2, around 14.2 to high 14s during this period. Right, I was watching the position. Now, to me, this is a drawdown, an intraday drawdown due to volatility. Not always particularly concerned about that. In other words, a lot of times I'll let the loss numbers ride here and just kind of see if it comes back towards the end of the day. This is what we looked like there. Again, we weren't tagging any maximum delta numbers or reason to adjust it intraday. End of day, right, this came back to being down around minus $8,000. I had to buy these 1160 butterflies. So the question is do we max losses out for that move during the day, or do we stay in? I mean, I'll take either one. I mean, I'll leave that to you guys because you guys know how you did. If you're in it, like I said, personally, I've had some people who lost, some people who gained. I would have stayed in it, but like I said, I'll let that be a decision to you guys. If you have a preference, just tag that in. So anyway, or we can trade this out. So anyway, from there, where we went to 15:30, we bought the 1160s. Wednesday at 10 o'clock, we had to sell them. All right, well, that was kind of a weird thing. Wednesday at 11, let's see, why did not that, let's see if this comes back. All right, so that is not coming back. I'm going to close options view here for a second again. We're having trouble with that. So we'll shoot back to the 7th. We'll just go to the end of the day, the 7th, because we're running out of time. So at the end of the day, the 7th, we are actually looking like this, right? Our delta is perfectly fine. We're down about 4,000. The thing about this trade is it comes back very, very quickly. And then if we go to Thursday, actually there was only a minor move on Thursday, which was to come here. We bought a couple of these 1120s. We're minus 256 delta, which is normal. And then on Friday, we backed off a little bit. And we're just sitting here at positive 112 delta, down about $1,500. So the trade's pretty much come back. We'll see if it goes. I got like 7 votes to stay in and no one said to get out. So we're going to hold this in then. We'll call that the results. However it trades out, we'll go from there. And this is the position we have coming into today. So we'll see how this goes. Realistically, we're only trying to get $5,000. We get one flat day, we'll probably be there. So this close to expiration, because this T+0 line recovers very, very quickly in this trade. So that is all we have on all the January trades. So everything's still open. We'll see how the week works out. As far as our February trades, really didn't do anything to anything except for the M3 trade. So let me just go to, I'll just show you the February V Condor, which is doing fine, right? No adjustments here. This is what the position looks like. If I go back here. So nice healthy looking M3 trade. I actually really liked this entry when we went in. It was nice. One of the nicer entries for a V Condor. February Bearish Butterfly. Again, no need for any adjustments here. We never got in any trouble anywhere. That's what that trade looks like. On the M3 trade, I did do a rollback on Tuesday when the market was down. So if we come back to Tuesday, and we'll switch over to the M3 trade. Right, this is the position we were in towards the end of the day. We were well below our short strikes with a 16-point down move and over our positive delta limit. So I just kind of rolled back to our 1140. I reduced my contract size down to 10 contracts, and that position looked like that. And then as of Friday, there were no further adjustments. So I don't think there were further adjustments. No, I don't have anything noted, so I would say that there were not. We're looking like this. Vega's still negative, theta's positive, delta's fine, and looking like that. So this is still a healthy looking trade. Looks good. Would I ever make any adjustments if my February M3 intraday or wait? I see almost no circumstances where I would ever make an adjustment to this intraday this far from expiration. I mean, possibly here, if we go back to, right, the only day that would even be in question, which, like I said, I'm typically not going to do it anyway, but would be like a Tuesday if we go pre-adjustment. Some people have a 2 times maximum delta limit, so our maximum delta for an intraday, so our maximum delta being on a M3 trade this size would be plus 50. If I hit plus 150, maybe I might be looking at doing something, but don't know if that's even ever going to happen. That's down in here somewhere. And realistically, if we had a move intraday down into here, we're going to get a very significant bounce, and I would probably deal with it then. But I mean, you got to look at, we're already 25 points down, right? If I was to draw another 25 points down, I'd still only be here. Yeah, it would stink. We may end up losing the trade over it, but I'm not concerned about losing a trade, and that's the big thing trading. You can't be concerned about losing a trade. If you're too concerned about losing a trade, you're going to overtrade and you're going to lose. So your concern of loss will create your loss. You're better off, like I said, just to, if the market did happen to do something like that and I got down near my maximum loss level, I have to shut the trade down back here, but I wouldn't do anything intraday. I'd wait till the end of the day, and if I'm down here and I'm down too much money to make the trade work out, then you just shut it down and move on. I don't even know where I just got a question. If I was putting my M3 on for today, where would I position the trade? I don't know where the market is right now. Yeah, so you'd be looking at 24 points under, so 1160. Let's see, I can't show that on this video. I think I put mine on at 1150. Let me pause the screen for a second. I put a February on I think it was Thursday or something. And I put it on at 66. Yeah, I'm on 1160. I'm on 1160 live. So I still like the 1160 number. So that's probably where I go with that. And that, I think, is all the questions. So, thank you for joining me. Thanks for all the great questions. That was a lot of fun. Just keep in mind, I'm doing the live trade update at 10 o'clock for SMB Options Drive members. If you're a member there, you want to see that, go ahead and see that. And if you're interested in the Financial Freedom Workshop that we're doing that webinar Thursday nights at what is it, 7:30. So hope to see you there. And last question is, remind me on positive delta limits. Plus 50 on a 10 lot would be end of day delta limits. All right. Well, have a great day, everybody, and have a great week trading. We'll talk to you next week.